As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey guys, and welcome back to my channel. Today I would like to talk about Chinese stocks, Chinese companies that run the risk of delisting. Together with that risk, together with all the things that are going on in China, like the zero COVID policy and the many lockdowns, we are wondering, are China stocks still investable? Are they buy now? Should I buy them now? Why should I buy them, or why should I stay away from Chinese stocks? So what started it all was 18th December 2020. Holding Foreign Companies Accountable Act became law, and now the SEC in the US has created a huge list of 270 Chinese companies, including some large companies like Baidu, JD.com, Tencent, on this list of companies that run the risk of being delisted in 2023 already. So next year, not that much time left anymore to get to fulfill the regulation in the US. So I don't know what these companies are going to do. NIO is on it as well. Strangely enough, I have not seen Alibaba on here yet, but that just indicates to me that the list is not complete, and I expect that company to still appear there. So China does not want their companies to be delisted. Their Shanghai Stock Exchange has never really worked that well. It was extremely volatile, and so they still have Hong Kong. Hong Kong is of course better, but yeah, they want access to foreign money, so they have revised recently its audit secrecy laws in a bid to stop around 270 companies from being delisted from US exchanges. So they really want to keep those listings, and that's a really positive point. So it said it would change confidentiality laws to prevent from overseas companies from providing sensitive financial information to foreign regulators. The SEC is not yet convinced. They said about 1 week ago, even if an agreement is signed, first we really need to inspect and investigate completely in China and Hong Kong. So there is that risk. So what is that risk? The risk is the listing of 270 companies. I think when you are going to invest in China, you just have to assume that's going to happen. You have to assume that's going to happen. The stocks are going to be delisted. So where would these companies go? We can see here that Switzerland has become a new listing destination for Chinese companies after China expanded the Stock Connect scheme. So four Chinese companies have really planned to list in Zurich, which is quite, Switzerland is the world's largest wealth management center. So yeah, that's an excellent location. I would expect some to prefer Hong Kong, and a lot of these companies like Alibaba, for example, Tencent, they already have listings in Hong Kong. If you plan to buy Chinese companies, I definitely would, if possible, buy it on a non-US stock exchange. But of course, with the smaller stocks, you usually do not have a secondary listing, so you might not have any choice. I would like to go a little bit deeper into 5 Chinese stocks and just give my opinion on them. So to see, yeah, this is definitely not investment advice, it's for entertainment purposes only. If you like these kind of videos, please like, please subscribe. Let's go to our first Chinese company, which is JD.com. It's a big online shop, a bit like the Chinese Amazon, except they're going directly from China to consumers. So they're cutting out the middleman. And when we look at the numbers, then we see they're currently valued at $56. And yeah, look at their earnings per share. This is quarterly, of course, but they're currently in 2022. They'll probably trade for like 5 PE, and they're even predicted to go probably like 1 PE in 2026. So I would say that JD.com, I like it. It's definitely a hold, potentially a buy. Again, you have to trust these numbers. That's the only thing. You shouldn't care too much about the listing, but the numbers are important. Second company, NIO. NIO was a high-flying stock, basically the lover of the retail investors. And look at this car. I mean, I love this car. Look the way it looks. I would love to drive a NIO like that. However, looking at the numbers, I'm a little bit less enthusiastic about that, to be honest, because they're still not profitable. Yeah, and they won't be. Only in 2023 they're going to be trading, or in 2025 they're going to be trading at 20 PE. So it's another 3 or 4 years you might be facing with a little bit downward fall. So it's either a long-term hold, and then I really say don't look at it, or it's a sell, and try to go in something that's that's generating revenue now. They also diluted their shareholders. I mean, look at that. They went from 1 billion shares to 1.6. That's, I mean, this is a crazy dilution number. Of course, the question is, are they going to continue diluting? When we look at their debt, yeah, it looks like they still have debt. So there could be more dilution coming, guys, because of the amount of debt, or they could say, because we dropped so much, we might not dilute again. I didn't look into the details. Do check that if they're planning to dilute. If they're planning to dilute, I would say it's a sell. Sell if they're planning to dilute more. Otherwise, you might consider a hold. But keep in mind, there could be more pain coming for this stock. The next one, Alibaba. By 2027, 28 will almost go at a PE of 1 as well. So not yet as good as JD.com, but quite close. So very good company as well. So I would rate it on second place so far, right after JD.com. I do like this company. I think it's a shame that they don't give dividends when their earnings are so good. A little bit the same for JD.com. Next one is 360 Digitech. Probably it's a new name. I doubt many of you know this company. It's quite small. It provides services to financial institutions. One of the things it does is connecting lenders with banks, and it has really low default rates according to its earnings. So I went a little bit deeper in this stock, because when looking at these numbers, I love these numbers the most of all the companies. That's why I went into the earnings, went into the presentations, made my own calculation of what it was worth, and I ended up actually buying this stock. Even though it's only listed on the Nasdaq, it only has one listing. So I would like to know what is going to do at the dual listing. But just looking at the numbers, you're seeing it started giving a dividend. I think it will be a quarterly dividend. In that case, we're looking at a dividend of 5.8% per year, or $0.22 per quarter, and that's an amazing dividend. And they only have to have a share payout of about 15%, so they can give a 6% dividend for a 15% share payout. Most banks, they give like a 30, sometimes even 50 or 60. I think Johnson & Johnson does 54% share out. They can give a 6% dividend for a 5%, for 15% share out. So that means they're pretty cheap, and yeah, something they will be raising their dividend yearly, so that it will go up and up, and you can buy this income cheaply now. Even if they would get the list on the Nasdaq and they would not get a secondary listing, then you would still get a really nice dividend. So buy it for the dividends, and you can fake the numbers, but you cannot fake the dividend. So they're also planning to share buyback. So yeah, I mean, this company is so attractive that even with the delisting risk, that I'm keeping this stock, because even if they will get delisted, I will get a 6% growing dividend. But I do think they will look for a secondary listing, and they haven't done it yet, because looking at their earnings, they said 2020 will be quite challenging. China-US relations are under pressure. Regulatory developments for the industry, and an impact from the pandemic, but they do see recent positive signals that things are improving. So I ended up buying this stock, and I think it will be a really nice addition to my dividend portfolio. Last stock that I want to discuss is Tencent. Really like Tencent. So in the sense of, as a company, they're working with, they are offering cloud, they're working with artificial intelligence, so they're like a huge technology company. They don't think they have US listing, so yeah, they don't really fall under the listing risk, but I did want to discuss them quickly. So they trade at 43 euros, which is pretty much the same as dollars these days. They actually give a dividend. I think it's about 0.5%, so not spectacular, but like what I said before, you can fake the numbers, you can't fake the dividends. It's much more hard to fake a dividend. But they're trading probably at a PE of like 20. So that's very close to what US technology companies are trading for. And that's why I would put it on the 4th place. I would not consider this a sell at this PE though. I think that's a hold for me. It's not a buy. So in order, so again, for me, Digitech 360 was a buy. I think JD.com is a buy, and Alibaba is a buy as well. So these are my 3 favorites. I probably would be selling NEO, or I would be holding on long term without looking at it, because I think we're going to see more red there, and I would be holding on to Tencent. So guys, remember, all these stocks, they've had a major sell-off. So if you're ever going to go into Chinese companies, this might be the right time. And yeah, as I said, you can't fake dividends. Consider some dividend Chinese companies. Thanks again for watching. This is not financial advice. If you like this video, please like, please subscribe, and see you next time. As always, guys, this is just for entertainment purposes only. This is not financial advice.